All right, folks, let's talk about risk mandates and questioning authority. You know, for a nation built on individual freedoms, it's feeling more and more that the paths we want to pursue are being blocked, including the application of our own critical thinking and skepticism. You know, it reminds me of that song Signs that was released by the Fagman Electric Band. In fact, in that most consequential year of music, of political music, at least 1971, part of the lyrics, sign, sign everywhere, a sign blocking out the scenery, breaking my mind, do this, don't do that, can't you read the sign? You know, these days, the biggest sign is vaccination mandates, and anyone that even suggests that they need to think about it is being dragged through the gauntlet of cancellation efforts. Now, for stock investors looking to navigate this market on their own, there are countless efforts to put them back in line, which means hand over your cash to the system and just stop asking questions. Now, here's what I learned more than 30 years ago, in my first year, in fact, as a stockbroker. People believe the right to judge and take risks should be theirs and nobody else's. You know, I was working late one evening. I'm busting my butt trying to make it because I'm working 100% commission. I get a woman on the phone, and I've got this new stock that the firm is promoting. So she says, okay, I'll go for it. I'm taking the account information, and I discover her only source of income were her Social Security checks. So I informed her, listen, this investment is too risky for you, and it wouldn't be right for me to take the order. Believe me, I needed it. I was working 100% commission, but it was wrong. The next morning I come in, the office manager calls me into his office, and he told me that there was a complaint against me. It was the woman from the evening before. She was very bitter that I had the audacity to tell her what was appropriate risk for her. And you know what? She was right. I should have offered an opinion, but not denied her the right to buy that stock. By the way, on Wall Street, they call up markets risk on, but to me, the greatest risk is not owning any stocks at all. So understand how we use that word risk. Now let's get to some of your questions, because the thing yesterday was fantastic. First, we got a video question from Steve in Illinois.
Hi, Charles. My name is Steve Majors. I live in Glendale Heights, Illinois. I am currently retired. I collect Social Security. I have no debt. I have about $500,000 in various IRA accounts. I'm married. About $170,000 of that is in cash accounts. My big question for you is, what should we do with that dormant cash? We recently purchased some Coinbase and some Aristocrat stocks, but we still have that $170,000. So I'd appreciate if you could help me with that. Thank you. Bye.
Well, I like that question, in fact, because Steve covered a lot of areas. First, he's got that barbell thing, right? He's got coin on one hand, which we know is a volatile stock. It's down a lot today, but I think it's going to be a grand slam over time. And then the steadiness of aristocrats. And what he means by that, folks, are companies that have hiked their dividend payout every single year for at least 25 years, so you know they're stable. Now, if you're able to take a peek maybe once a day, every other day, I say, Steve and everyone else, stay fairly aggressive in this market. There are so many things happening in our world. The market's going to reflect that, and you want to own that. I want to bring you another video question, this time from Rob in New Jersey.
We've all seen technology stock prices move inverse to the yield on 10-year Treasury bonds, but companies like Apple that have many billions of dollars in cash should not be beholden to yields for day-to-day profits or losses, right? And consumers are not likely to defer the purchase of a device based on a bond yield. So what's the logic here? And should individual investors be influenced by these moves, which seem to be unrelated to underlying company fundamentals? Rob Calum, Hoboken, New Jersey.
So, Rob, I actually agree with you a lot here, but there are a multitude of reasons that tech stocks have been juggernauts, and I can tell you right now, over the last 20 years, it's not because of yields, right? Here's the thing. Sometimes, though, the same factors that weigh on buying yields could also cause tech investors to be uneasy. To your point, stay focused on the underlying fundamentals. Early on, a yield spike may get some institutional money out of there, but you're 100% correct. You want to own those names. And the good news, if they go down on the yield spike, that's a buying opportunity. All right, here's a fun question from Josh. Quote, thank you for always being the voice of the little guy. We need a strong advocate like yourself. My question is, would you be willing to offer a financial literacy course for all ages, but specifically for the youth? My answer is absolutely yes. It's a dream of mine. Right now, only 7 states have personal finance education in high schools, and that's only a standalone half a semester course, and it's only on personal finance. Face it, we all need to learn how to invest. The earlier, the better, because it's so empowering to take control of your own life. Also, it will help you judge decisions you make, from voting to lawmakers to everything else, much more effectively. The next question is from Becky, is one of a lot parents, in fact, have been asking about. My husband and I, we've done well with our investments. We're now 59 and 62. Our 2 kids are in college. I have a feeling our strategies may not work for our children. What advice do you have for college students? They will leave college debt-free due to investments made when they were born. Well, here's the thing. Obviously, start early, learn a lot, but they have to get in the mix, right? You can read and read and read forever. It's a lot different in real life when you get in there. And I agree, things are going to be different. There already are. I would closely tether their investments to the 4th Industrial Revolution. I try to talk about it every day on this show. It's going to change how we live, how we work, how we play. Anything that from your generation, my generation, even our grandparents' generations could even dream of. And by the way, I will also say this. There are few greater blessings than to be able to send our kids through college debt-free. That is fantastic. Now, before I let you guys go, here's one more real quick. Why do you think the SEC is not doing anything yet to regulate the market manipulation, since it is something that is already known worldwide? You know, here's the thing. There are several issues really here. And yesterday we had a fantastic SEC lawyer, Lisa Braganza, and she said she thinks that the folks there are advocating for small investors, but they're actually making things work. We do know the SEC is always behind when it comes to the technology advantages that are used by the big boys. Investing trends among retail investors, that they always kind of are behind on that too. And let's face it, some cynics may say that maybe they don't want to offend the industry where they might seek more lucrative employment in the future. Now, of course, there's got to be a greater sense of urgency to fix these things for everyone to feel comfortable with this market. We know getting into the market is so important, which is why I am inviting everyone to read my daily market commentary. Go to wstreet.com. You will love it. It's free, and I write it every single morning. All right, one of the world's biggest cities just became the first to announce it's joining the metaverse. That's right, it's a new gold rush, and you want to take a part of it because it is making a lot of money for a lot of people. It could be you. And Bitcoin, well, if you didn't think it could go any higher, think again. If you think you missed the boat, guess what? Might not be too late.